That being said, let's take a look at the performance of markets in Asia after the US Federal Reserve's first rate cut in over 4 years. Asian stocks rose along with US equity futures for the Fed rate cuts, interest rates by 0.5 percentage point, as I mentioned, and signaled further easing in the months ahead. Australian shares climbed and Japanese stocks rallied in early trading. They were helped by fresh weakness in the yen against the dollar. US stock futures advanced after the S&P 500 initially touched a record before closing 0.3% lower. Fed Chair Jerome Powell cautioned against assuming big rate cuts would continue. However, the oversized cut suggests Asian central banks can also start to ease without worrying about exchange rate pressures. Naomi Fink, chief global strategist for Nikko Asset Management, said, I'm quoting here, Asian stock markets are gaining on the immediate benefit of the rate cut. However, she warned about the growing risk to markets as US stocks reflect strong earnings growth while the bond market expects economic weakness to justify further Fed cuts. Fink added, you can't have both. In the US stocks, especially those of economically sensitive companies, they briefly surged Wednesday. This drove up the S&P 500 as much as 1%. However, by the end of the trading session, from stocks to treasuries, corporate bonds to commodities, every major asset was down on Wednesday. While the scale of declines were minor, a concerted pullback like that has not followed a Fed policy decision since June 2021. For latest news, download the WION app and subscribe to our YouTube channel.